So good morning, active traders, and welcome to our Trading Week Ahead broadcast. Coming at you live here on Saturday, March the 6th, 2021. I'm Ken Calhoun, your host from the original Day Trading University and Trade Mastery, with a up and down market, right? What goes down goes up. This is the two-day S&P ETF, the spiders. You can see we had a big sharp drop on Thursday and a big recovery yesterday afternoon. What I'm interested in looking at is the VIX. Look at that in just a second. But first, pardon my voice. I was doing an all-day session for my live room members yesterday. Anyway, sorry. We had a hammer with the market yesterday. We're still in a technical downtrend. This is the S&P, the spiders you can see. Let's pull up this SPX, the spiders you can see. We're clearly pulling back off the highs, and we've got a preponderance of red candles. I look at the bounces in a downtrend as a bull trap. You may want to sell. At least yesterday I sold virtually all of my remaining stock positions into yesterday's rally, because I think that's a good price to get out of Dodge as far as equities go. The market may keep going up a little bit. You know, the Fed stimulus package is supposed to pass this weekend, and that may lead to a upside move, a tailwind for the markets on Monday. But ultimately, we're in a expanding range downtrend. And this is what I mean by that. Your ears should perk up. It's like, what is this guy talking about? Allow me to explain. Successful trading is all about understanding ranges, along with risk management. When you have a megaphone pattern like this, we have a indecisive top, right, with small flat candles. We got uncertainty as evidenced by the doji here, and the doji here, another doji there, and the drop. We're now starting to see an expanding trading range with larger candles in red, some large heavy red candles, and downward pressure in the market. So, you know, ignore the fact that we got a little bounce yesterday afternoon. The main thing to look at is the directional trend of the market. And within that, you want to look at an expanding range. Well, which way is the market expanding in terms of volatility? And it's to the downside. Now, speaking of volatility, so my forecast is I don't predict, I react, but if I had to predict, I'd say, well, a little bit of upside move, maybe Monday, Tuesday, some chop, but ultimately a red week next week. Could be a surprise to see the market rally on up to new highs next week. Could probably be a small bounce followed by ultimately selling pressure continuing into next week. So do be cautious if you're swing trading equities. The other key technical indicator to look at is our VIX, our volatility indicator. And you can see we've got a big red drop here in it, kind of a bearish engulfing in the VIX lately, but we're still up above the 22, 24 region. We closed off at just near, what was it, just under 25. But the VIX was down sharply yesterday, down 16% from the open, but it's still in an uptrend. So the trend is still up, which is bearish for the stock market and the VIX. So do pay attention to the VIX. What I'll be looking at is, and this is a key technical signal, pay attention to whether or not the VIX recovers 26. If it does, that means the stock market will likely continue to sell. As long as it stays within I'm using 22 support. I know technical support's 20, but from a trader's perspective, a professional trading perspective, I use 22 support, 26 resistance in the VIX. And if we pop back over to the 26, we're likely to see continued sell pressure in the market. So be aware that is kind of the backdrop for market directional volatility next week. Now let's take a look at a few hot charts. What's been hottest lately, other than the ridiculous GameStop, is oil. And you can see Apache and OxyPeat, Occidental Petroleum, are two of our best swing trading picks that I'd mentioned for my members. And you can see APA is taking out new highs here, so that's one to keep on the radar. Oil has been strong lately, and so breaking out of congestion and in a nice directional uptrend. APA, one of the picks you may want to pay attention to. A question from Brian. Webcam, nope, I'm not broadcasting my face today. I look really tired. I was trading all day long yesterday. And so my eyes look tired. And so rather than show you my tired face, I'll show you the exciting chart. So that's more useful anyway. But thanks for that ask. Anyway, OxyP, look at that run from 20 to 30, 50% run in just about a month, a few weeks. So OXY is up sharply, and UCO, one of my ETFs that I trade, oil ETF, UCO, another spectacular run from 30 to 60. Bum, 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 bum. Show me the money. So we're going to see if this guy breaks over 64 or craps out and goes back down under 60. Either way, be ready for it. So oil and also cannabis is on the radar. Remember, our cannabis stocks had got cannabis, green mania, and they ran up sharply, and then all of a sudden they crashed and they burned. Well, we see a hammer here yesterday in Growth Generations. That's like the equipment manufacturer for the cannabis industry. And it's also hovering near the 100 simple moving average. So if it does take out a bounce to say over 42 or 44, I'll likely get back in. Longtime favorite, Tilray. Hammer time. Bum, 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 bum. It's a hammer, right? Hammer time. So we want to go long, or at least I'll be going long over 24. Now, I highly doubt that it'll get back to 60 anytime in the next month or two, but it may well run up to 36. And that, by the way, that would be an exit target, is play the most immediate trading range. So the most immediate range, MIR, most immediate range would be from this 22 up to this resistance curve up near 36, 38. So if I buy 24, if I can buy shares at 24 scale in at say 28, 32, then sell it all at 36 on a rollover, that'll be a good round trip. So pay attention to Tilray, one of our cannabis stocks, because often these patterns that do a parabolic arc, they run up, and they come back down. It's of no interest yet, but we have a hammer, which is a bullish sign, if it does break price action over 24. Another one I'll be looking at is Canopy Growth. I've traded all of these. I went to cash in my equities last week because I think the market may well still sell down for some more. We may be on the cusp of a catastrophic drop or another repeat of last March. Well, maybe not that extreme, but a repeat of a pullback or correction this month. And so for that reason, I'm treading very lightly. How do you folks think? Are you currently swing trading, day trading, or doing both right now? I'm just curious. Let me know. Swing trading, day trading, or both? I'm doing a lot more day trading now myself because I'm suspicious about the market continuing on up to new highs. Unless it does take out new highs, then I'll start swing trading more aggressively. But I think we're in pullback mode. So let's see. Oh wow, a lot of questions. Hey Dan, hey Ron, hey Wendy, hey Chris, hey Steve, hey Sid, hey Gustav, hey Trey. Be ready to sell in the bounce next week. Yeah, I agree. I think we may well have some sell pressure ahead. And let's see, what's the R mean on Tilray? That's just restricted from short selling with the uptick rule. Yeah, Marathon's up. Okay, thanks, Steve. Yeah, no doubt. MRO and USO. Yeah, I used to trade Marathon. Thanks for the reminder, because that's one that also looks wonderful. I like this one actually a lot because it's cheaper. It's not, an expensive one and still has a really good uptick. So another oil stock is Marathon Oil, along with Apache and OXY. It should go up there at the top. But yeah, thanks. That's up here with UCO, OXY, USO, and AAPA. Those are all good oil plays. Hey, Wendy, do we have a downside target? Yeah, we'll take a look at that. I think it was 35.50 was a strong selling signal for the market. If we lose 35.50 in the S&P, watch out below. Yeah, I'll pull up the 1 year chart later. But yeah, Marathon, another good chart. So this is another example of an oil stock that's been going up, MRO. And you can see the patterns are pretty much identical, APA and OxyPete. I like Oxy a lot. That's one that has a nice clean directional breakout, almost doubling from 17 to 32. So good play. So oil and cannabis. So oil continuations and cannabis on bounces are the two sectors. And remember, as an active trader, it's critically important that you understand sector rotation because it's very active right now, even across markets, right? Some days the Dow will be up, but the NASDAQ will be way down, right? That was the case a week or two back. So sector rotation, meaning which industry groups are getting the money from the big players that we can tag along with and hopefully make winning trades with as well for either day or swing trades. Where's the money? Show me the money. So it's been going out of cannabis, but it's at a support level where it may bounce. It's been going into, and therefore better odds play would be just the directional continuations and things like OxyPete. I'll take a shot at Marathon. Thanks for the reminder. That one's good. I'll hit that over 1370 or so. Doji yesterday, but if it breaks, not a trade recommendation, but if it gets over 13.5, 14, Marathon may be a good play as well. Now the copper and metals have pulled back a bit, like Freeport. So it's in a pullback that had been very strong. So I sold my FCX yesterday reluctantly. I'd been holding it for a long time, but I thought I'd get back out of it because it's in a pullback in an uptrend. And so I think it's a good idea to cash in on that. Now let's change channels here and take a look at some day trading charts. Well, let's do a quick, before we do that, let's do a quick technical run. Let's say, let me pick an easy one. That one's easy. OxyPete. Let's say you bought OxyPete on the way up. Say you bought in the low 20s, 22, 23. You're happy it's up at 31, but you're concerned that it may be due for a pullback or a rollover. What you want to do is tighten up a trailing stop to lock in a profit. So let's say you're correctly long OXY, as I've been telling my live room members for the last 3 weeks. And they always like it when I do these activities with them. In our brief time we have here on this Saturday session, let's do that as well. Where would you trail a stop? The answer just jumps out to me, but if you're long Oxy, where would you sell your Oxy? If it goes back down to where would you sell your OXY? Hit me up with your answers. I'd love to hear what you guys have to say. There's no right or wrong answers, but we'll see what we say. Where would you trail a stop if you're long Oxy? Sell it all. Ring the register. Make it rain. Boom. It went up, but as we all know, what goes up, even Tesla, goes back down. Like I called Tesla short at 794 for you guys. And now it's dropped to 550 yesterday, right? So boom, nailed it. Okay, thanks, Chris, Trey, Philip, Frank, Damon, hey, Mira, Stephen, GB, Wendy, Trin. We've got 29.97, 28, 30, 50, 29.9, 30, 29.5, 28.5, 29.8. Mira got it exactly right, as she always does. You could be teaching here with me, Mira. 29.8, a loss of the 30, right? Just under 30. So that's exactly what I would use. It's always gratifying to see somebody that gets it so consistently. One of my long-time traders, Mira. And you guys, most of you guys are all in the ballpark too. So that's great. 28.5, 29.80, 30.60, 26, 28.90, stop 30. Yeah, anywhere right under 30 would be the trailing stop. And that's exactly, Mira got the right answer. She always does. It's amazing how consistently right you are. Congratulations. I wish everybody was that good. Anyway, but yeah, right under 30 at 29.8 would be perfect exfil, right? A loss of 30 would be a good place to go out. Take the money and run. You don't want to wait for it to get down here. Why sacrifice multiple points of profit? And this illustrates a concept you may have seen in one of my award-winning Stocks and Commodities magazine articles using decade values. I like to sell nines. So if something, I never buy with a 9. So I would never ever have bought this at 29. But I would sell it if it loses 30 because that's in a good exit area. So the multiple of 10, a 30, a 20, a 40, those are really good decision support levels. So I would have been tightening up a trailing stop right as it got near 29 and probably gotten out on Thursday. But if I was still in come Monday morning, I would definitely sell at say 29.8. That's exactly where I'd set my stop. So good call. And you guys mostly all got it right. So you're in the ballpark of the right area, and that's what it takes to make it as a trader. Now let's take a look at some day trading charts. We only got a few minutes left here, so let's hustle. Were any of you folks trading EYES? That was one that one of my many smart members in the live room mentioned. And one of the things that my room members appreciate, and I appreciate them for being there, of course, is that I always have a what I call an answer key available for everybody each morning. Let me show you what it looks like. You'll like this because no one else in the world does this. But ahead of time, I post the day's watch list. And unlike other rooms where all I do is just cover a watch list and ramble on about it, I'm a professional. I give specific entry triggers in real time and also before the open. So, and I update them throughout the morning session. But for example, one of my traders, I did not see eyes. I got lots of eyes and ears out there with lots of live room members at Trading the Open. But one of my so many smart members, and one of my smartest members, Mick, had mentioned EYES back when it was around $2 a share, and he said because it was popping up from $1.50 pre-market to 2.5 and pulling back in market, or I should say, in market we called it long at 230. And so if anyone took my 230 long call, I gave that to my members ahead of time. It ran all the way to 9.5, almost $10 a share. So it could have maybe done something with that, right? So this answer key is something that's, just imagine if 5 days a week, Monday through Friday, you were able to get my answer key, professional alerts with the best tickers out there, whatever the day's best scappers are, and we often cover the cheap stocks. You can see a lot of them from yesterday were under $10, right? This one was the one that worked out the best, EYES, and I also cover ETFs that run up like SRTY and SQs and UVXY. Anyway, just imagine you were able to get this 5 days a week, which if you join my live trading room, you will. You'll be able to look over my shoulder and get my best 5 to 10 picks each morning and specific educational use only, paper trading use only, entry triggers, so you can see exactly the price points at which to get in. And live, I walk people through the exits as well. I say, new traders sell it all now. If you're an experienced trader, trail a stop at X price or whatnot. So I walk people through specific entries and exits, and I work very, very hard to do that. And that's why the room's been so popular for the last 20 years. So anyway, this is a good example. Just imagine you got this yesterday. How much money could you have made had you listened to these alerts and played some of them? Now I'm not 100%. I wish I was, but I'm pretty. I won't say I'm even close, but I do pretty good each morning. And a lot of that's thanks to my members, folks just like you who looked over my shoulder and worked with me each day. And we got so many members that join, and we got lots of smart commentary from members that have good picks as well. And so we work together as a team. So anyway, you're certainly invited to try it out for the risk-free money-back guarantee $29 trial at my trademastery.com/live, Trading the Open live room page. But just imagine, you're equipped with this each morning. You're handed this, now again, I'm going to tell you, they're not 100%. They don't all work out every single day or anything, but frequently we got, at least half of them work out, and they tend to work really well. And you're able to see what's worth trading in the first place and exactly where to trade it. That's kind of like the missing link that no other live room provides is specifics, and that's very professional. And so that's one thing that I'm proud of my members who helped me so much, and proud of all of you for considering it. So anyway, that's one thing that differentiates my live room from any other place out there. Anyway, speaking of which, let's go back to some charts. Let's get back onto our regularly scheduled program here. But do you think that would help? I think that's one thing that my members at least love. They say that no other place does that. You can read hundreds of testimonials from members that like that critical missing link. Because anybody can talk like a talking head. Hey, it looks like it's going up. Maybe you want to trade it. But what counts is where's the specific entry and where's the specific exit. And that's what sets my room apart. Anyway, EYS was up. GameStop, I was day trading this back when it was like 50 or 60. I'm not going to trade it right now. I think GameStop is due for an epic crash, like Hertz and Tesla at some point, but I'm not going to short it because it could squeeze up to 300 again. So I'm not going to swing trade this, but this may be something for day trades. And I like charts like this. This was one of our picks yesterday. WTI ran from 4 to 5. Now what this illustrates is a whole number. The pattern, I do a lot of work teaching traders pattern day trading. I've done that for over 2 decades, tens of thousands of traders. And one of the patterns, you may see me, my article in Stocks and Commodities Magazine, where we like to buy right above a whole number. If I could circle this in a pen, I would. 4 is a whole number support. We look for longs above the whole number. And then the more important piece of the equation is to always sell 0.9s, always sell right under the nearest whole number. And we like to cover these for our live room members daily because they provide really good trade setups, right? You got a 2-day high, a breakout above the prior day's high. That's critical, by the way. It's not optional, that's essential. You want something that's breaking out above the prior day's high. And this setup was perfect, right? It was a whole number breakout right above the previous day's high, so a long trigger right over 4. And the more important thing is to sell at, say, 4.8, 4.9, right under the 5 whole number. A question from Charles, that I consider TQs now? No, I thought my thesis is the market's due for a beatdown. So I'm long SQs, I'm long SOXS. I call BS on the market. I unsuccessfully tried to buy bounces yesterday afternoon in those guys, but I still think our inverses, like I traded successfully earlier in the week, are going to go back up. So I bought them on weakness at the end of the day, just like, I don't know, maybe $6 grand worth of the inverses like SQs, SOXS, UVXY, TISA, and whatnot. So a good thing. A trader trade saying I agree with the 9s rule in the past. How many times did I make profits? Set at whole number targets. Yeah, whole number targets are really good because everyone else uses them. It's something I've taught traders for 2 decades, is sell into the whole numbers. And then it became kind of a self-fulfilling prophecy. I'm the originator of a lot of concepts that you may be aware of out there. A lot of what I cover is tape reading. What's worthless is things like level 2 or level 3, or unless you're scalping for pennies or nickels, which is a stupid way to trade, in my humble opinion. It's much smarter to go for nice moderate wins between whole number ranges with charts that have good volatility. Speaking of which, some of these up and down charts have good trade setups, but some are better than others. And let's take a look at evaluating tradability. It's a quick coaching tip I wanted to wrap up today with. You want charts that have big ranges. I like big ranges. You like things that have big ranges, right? But are not expensive. I don't want to trade Amazon. I've never traded Amazon. I've traded Apple, but I'm not going to trade Amazon or Netflix or anything that's too pricey. You want something that's a sweet spot, whether it's a $4 stock that runs to $5, that's great. Or like this, a stock that was $38 that ran to $42 yesterday before giving it all back. But evaluate tradability based on trading ranges and also how clean the chart is, meaning absence of chop. Now, these aren't perfectly clean, but you can see the swoops up in TZA was relatively healthy. And if you compare that with, say, SOXS, the earlier chart was better. And this one is kind of trailing the pack. Now, I bought some of this yesterday afternoon at 870 because I think UVXY anywhere under 9 is a bargain. So I bought me some yesterday, just 100 shares, but I picked up, 100 shares of most of these guys into the close. TZA, I think I only bought 40 shares, just like $1,000 worth. But anyway, when it comes to evaluating tradability, the most important thing you want to look at is directional volatility and the trading range to make sure that it does have enough range that's worthy of consideration. That if you do put on a trade, it's like the phrase that pays. It's a trade that can pay off for you. What you don't want to trade is cheap, choppy charts or expensive choppy charts. You want charts with good directional strength in them. So, for example, to me, this is a much better chart to day trade than GameStop because look at it. It's a This is our inverse Russell triple leveraged ETF TZA. And we ran 38 to 43 yesterday, and I nailed it on the way up. Not so much trying to bottom fish bounces on the way down, but anyway, the range was great, 38 to 43. Okay, so that's a $5 range. If you compare and contrast that with something like a GameStop, you got to pay a whole lot more money per share. So remember, a 5-point range on a $40-ish instrument versus this is like a 20-point range, 28 to 48, but it's $150 a share. So it's a lot more expensive and it's choppier. So this is a much more treacherous instrument to trade. And when it comes to day trading, you want to especially focus your energy on charts that have more consistency because they're easier to trade. I mean, trading is tough enough as it is. I like charts like this that have good, clean directional breakouts for swing trades, or charts that have big internal ranges like EYES for day trades, right? And I do cover the under $10 stocks every single day. So I used to not do them, but by popular demand, because I like trading them too now, because now the volatility is there, these have really good directional strength. So anyway, let me know if any questions. I appreciate y'all for being here. See a question from Yolanda, what time does the room meet? The official hours are 9 to 10:30, but like yesterday, I stayed around all day long for everyone. It was a very, very long day, but usually I'm there 8:30 till around 10:45 or 11, but minimum hours are 9 to 10:30. So I'm always there at least half an hour before the bell and up until 10:30. But I usually show up at 8:30 and I get folks pre-market picks as well. Let's see, Vic is asking, do I cover Forex or stocks? Stocks, we cover stocks and ETFs. We do not cover Forex or E-minis or options. I trade stocks. I'm a stock trader, is what I do. So I often trade along with my traders as well, so that's good. Let's see S&P levels for Monday. Just a sec. A question from Sid. Still note this. Where do I determine sectors that I rotate? Frequently, I'll use a percentage box like this, and what I look for is relative strength of the sectors. For example, if you compare biotechs yesterday with semiconductors, you can see relatively similar chart. However, if you pull back to the daily chart, you can see relative weakness in the SOX. If you look at, say, the 6-month, semiconductors have really been selling off, which is why our SOXS inverse ETF has been popping up a little bit. It's got nice big buying pressure on Thursday, right? Over 20 million shares on Thursday on a bounce. If you compare and contrast the semiconductor sector with the biotech sectors, biotechs have really, this is NBI, this is the biotech index, have really got creamed, right? It really got hammered down. So the relative weakness in biotech. So that's, to answer the question, that's how I identify relative strength of sectors, is look for the directional volatility and just visually compare which ones have sold off more compared to the others, and stay away from those. Which ones have shown some sign of strength or recovery, and start trading those. I've long said if the market gets under 35.50, that's a key strong selling signal. We've started to see some initial weakness off the earlier tops with an obvious resistance around 39.50 in the S&P. We've got support right near 37.20. So I'd use 3,700, the 100 simple moving average line. That blue line, you can see 3,700 is kind of that'd be a professional trader's short signal. And I won't say I guarantee you, but I would feel completely confident in thinking that most of the Wall Street firms are doing the similar technical analysis, that if we lose 3,700, that's a strong sell signal for the market. We lost the 50 SMA earlier near 38.5, but it's chopping and bouncing around up here. 3,700 is key support, and I'd use 38.70 as R1 and 39.50 as R2. So 3870 would be, the obvious is 3850, but this market has been one that's been very treacherous with ups and downs and false breakouts and false breakdowns. So you have to give it a little more wiggle room or a little more space above the obvious public money triggers for a professional trigger. Echo stop. That's my Amazon Alexa device telling me it's 10:30. So thanks for being here, friends. I appreciate it. I wish I could stay longer, but I've got work to do preparing for next week for my live room members. Do be sure to join Trading the Open Live Room. You have my word. I work really hard. We've got lots of folks who are really smart that help out. So we've got lots of teamwork, right? Frequently, I can't tell you how many times, many of the days, the best alerts of the day come from my members because I've trained so many hundreds of people. We have lots of smart people in the room and we work together as a team. So, you know, if you'd like to get good, honest answers and breakout triggers in real time ahead of time with specific walkthroughs, step by step, not just talking about charts that are going up, but giving specific price triggers for entries and exits, which really differentiates the room. You're certainly encouraged to join me next week at Trading the Open. So thanks so much for being here. Appreciate it. Hey, you too. Appreciate it. You're in. Hey, thanks, GB. Hey, Damon. Hey, Dan. Thanks, Ken. Be safe. You too. Hey, you're welcome, Srinath. Good to see you. Hey, Steve. Hey, Barry. Hey, Wendy. Let's see. Question, do I use Bollinger? No, I don't use Bollinger Bands. You're right, Trey. Yeah, someone was calling. That was my echo. All right, I think that's going to wrap us up. A good point about the Senate. Yeah, the Senate passing the bill will probably get a gap up Monday, and we may get a continuation Tuesday. Pay careful attention, just like the trading day. What counts is the close, right? What counts is the last hour or so of the market from 3 to 4. That's where institutional money flow comes in or out, specifically between 3:15 and 4 p.m. That's where money flows go in and out of the market. Similarly, on your trading for swing trades, what counts is the Thursday, Friday, you know, and so we're still in a technical downtrend. So I would anticipate, again, maybe a gap up on Monday, some little consolidation pullback or uncertainty on Tuesday. We may get a move to the downside on Wednesday, and definitely pay attention to Thursday and Friday because where they head will kind of set the tone for the week. So for the week after next. So do play the volatility the right way, and hopefully I can be a part of helping you stay on top of this and figure this puzzle out as we work together. So take care. Thanks for being here. I appreciate it, and I will see y'all next week. Bye for now. I'm out. Trade smart, trade safe.